Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. And if you want to make it even more beautiful, you know what to do. Hit the like button, subscribe, bell notification icon, let YouTube know you want to see more of this. And if you prefer to wait till the end, I'll remind you again to click the buttons down below. All right, there's been a lot of news about the world coming to an end and more further downside and recessions of multi-year bear markets, depression, etc. So let's have a look at when we're buying Bitcoin. A bit of an update here with the cryptocurrency Millionaire plan. I'll talk about that in a brief detail, but also give you an idea of where I'm buying, why I'm buying, the amounts, that sort of thing. All right, so just before I dive into this, I did mention yesterday, and there was a few comments as well about the Investor Accelerator. The price is going up on TIA Premium, so if you want to get in before the price increase, make sure you go and check out the link in the top of the video description to the Investor Accelerator. Join the free newsletter as well, and we'll shoot you out some details on how to get onto Discord, where I talk specifically about my buy orders for Bitcoin and cryptocurrencies, and also look at crypto trading for beginners, kind of like your own little Telegram channel there. Michael goes into a lot of detail over there. And in terms of the course itself, we have a Gann Swing Accelerator course. There is a Wyckoff Volume Accelerator course there. There is more trading courses and investing for the long term. There's over 30 hours of content that helps you build and design your own trading and investing plans. Plus, we have weekly group live streams where you can jump on and ask your questions as well, so that you can start to feel more comfortable with your own plans. So it's a bear market. Personally, this is the best time that I've found to be building the plans, or at least improving on them, so that I'm prepared for the next bull market. So anything I'm investing now, I'm hopefully making the best return I can now for the future. And that's what we're talking about in today's video, looking at buying Bitcoin at the low prices and updating the fear and greed plan as well. So I put a post out on Twitter a couple of days ago. I often post things like this, just mentioning where we are in the cycle, and just based on some historical data here, looking at the cycle buy zone. So I'll go into more detail of how I've created this particular chart and plan. Firstly, let's take a look at the fear and greed index. The average price of Bitcoin, $28,272. That's the amount purchased, so the average purchase price. Now, if you haven't seen this before, essentially it is just using this one tool over here. This is the fear and greed index for cryptocurrencies. Basically, it just rates what the market is feeling on a given day. And the buy signal is buy Bitcoin when the fear and greed index is 15 or under. So basically just go over here when it opens up the next day. What was the reading? If it's 15 or under, buy Bitcoin on that open. And this is about to close in about 12 minutes time. So we'll get another reading there. I dare say we'll still remain above these levels here in the 20s. So there won't be a buy order there, but you can see in the past, that's where the buy orders have been. And basically, it's not going to pick the exact bottom. However, what it does do is keep you out of buying the tops in the market where retail gets into the market. This is proven time and time again. Retail gets in at the worst times, and then they don't buy at the bottoms, and then they wait for the market to go up again, because it's all sort of built on feeling and following the sheep and the crowd and the herd to feel safe when the time is right again. But usually it's the opposite, which is why I like to look at the fear and greed index just as a beginner plan to get into the market. Now, I have something similar, but I also add in extra rules and filters to this plan so that I can start to hone in on the bottoms a little better than all the way down. It doesn't mean I don't have to buy on the way down, but I just want to hone in on the bottoms a little more, and then start to layer a few pieces on top for a plan that is going to get me better rewards and keep my risk a lot lower as well. So this all comes with experience and what we go into more in the Investor Accelerator. So that's what the fear and greed plan is. And essentially, this is just super basic of buying every time that signal comes up. And we've shown in the past that this has even outperformed billionaires. Guys like Michael Saylor buying at the wrong times. We've even seen Raoul Pal also talking about huge prices of 15K for ETH and all this sort of stuff. And then also talking about buying at the wrong times as well. And so this essentially has kept us at a better price than a lot of these billionaires. Yes, it is down 26%. But if we take a look at typically where retail comes in, then we can start to keep ourselves a lot safer and protect our money in the market and essentially just use it at the lows rather than so much of it at the highs. So I've got the retail sector here, and these are basically, the bull market started to take off, the tops, the crash within that 2021. And basically that was about a low of 30K to a top of about 70K. So just getting a price measure from about 50K, this is about an average here of where people may have got into the market, down to our current price of about 20K. It's a loss of about 60% on the portfolio, just on Bitcoin. And I know there's a lot bigger losses out there, especially if we started to sell off Bitcoin to get into altcoins. And now altcoins are down 90%, 95%, 80%. And so that's obviously going to vary depending on the person. But 60% down just using this plan, which can be much improved, it's down 26%. So you've done a hell of a lot better, because it essentially keeps you out of the peaks. It keeps you out of buying Bitcoin right at the tops. The Investor Accelerator members get a copy of this plan, and we obviously talk about it as well and try to improve on it, which is where a lot of this education comes into it. So as I said before, link to this is in the top of the video description. But if you just want to join us for our free newsletter, check that out. Also in the top of the video description. Let's have a look at the historical Bitcoin cycle buy zones, and the tweet is specifically looking at these lower sections. So what I've done is measure the tops to the bottoms, or the bottoms to the tops of the particular cycle, and we've gone through a lot of cycle stuff in the past as well, but basically just picking these areas, the cycle low and high, and then using the fib extension and looking at the 12.5 to 25% retracement from the top, obviously using the bottom price. And that goes back each cycle, and then just putting these little yellow boxes around the area that the market has basically dipped into has shown to be basically the bottom and the best times to be getting into the market if you were just looking at buying the low. Now, of course, these low periods are quite difficult to get into, especially as you can see now with this sort of bad news that's coming out, and there's a lot of confusion around this time it's different, and Bitcoin is now in a recessionary environment and things are going to be different. And look, everyone's welcome to their own opinion, especially when it comes to investing. It's their money. You do what you want with your own money. Being in the markets for over 16 years now, I used to get caught up in that when I first started. This time's different. We haven't seen this happen in this particular condition, or this asset start to weather itself in a new condition. But the main thing that I look at now, and everyone's entitled to their own opinion and do their own thing with their money, is things aren't really different underneath this sun. This world we live on, nothing is really that different. It presents itself in a slightly different way, but essentially the outcome tends to be the same. So regardless of Bitcoin now being in the first experience of a recession, things are going to get a lot worse. I still haven't seen that play out, and I am very wary of jumping on board with that sort of mindset and psyche saying, well, this time has to be different. Those sayings have been said decades and decades ago by people a lot smarter than me with a lot more money than me. They said nothing is different. It's generally the same thing. It rhymes. There's a lot of things that are very similar. So I'm going to take that with a lot more emphasis and a lot less emphasis on people saying that this time is different, and basically just use the plan here to buy Bitcoin underneath these levels at the lowest prices possible. Sure, it could drop to 11K or 12K, or like some say between 10 and 14K. Honestly, I don't care. As long as it's in these lower levels, then I'm reducing my risk from buying at the top and focusing on the fear and greed as well. It also removes the FOMO at the top. So like we saw with the results here, it is able to save you a lot of money. And that's basically one of the first steps when it comes to investing, is saving yourself the money. We looked at yesterday's video saying, don't lose money. And if you forget rule number one, go back to rule number one. For rule number two, if you forget it, go back to rule number one, don't lose money. And that comes in the form of obviously saving your money. It's meaning don't lose money at the tops. And then if you can find a better entry point, like what we're doing here, then that's going to help us for the next stage of the cycle as well. So I've got a few questions I want to have a look at here. These are corrections from the top of the cycle to the bottom in the past, about 87% from the 2013 top. This has been done heaps of times before, so we won't spend a lot of time on it. The previous cycle, 84% from the top to the bottom. And sure, that was a couple of percent different. And now Bitcoin is about 75% down from the top. So a fair bit different in this case, but remember, we didn't shoot up anywhere near as hard. So we could possibly expect, and it would be a reasonable thesis to say that maybe we don't dump anywhere near as hard. However, we never know if we're 100% right, which is why we plan for it and have our cycle buy zones at the bottom, especially when the risk has been reduced. There's a lot of fear out there in the market, and it's looking like a pretty safe area for it. But just measuring to the bottom of this particular this zone here comes up at about 84%, which is very similar to the other markets. Now, if you choose to wait for that, that's the risk that is taken. Maybe the market never sees underneath 17K or 14K, and so then there is no time to be buying Bitcoin at those lows. Now, the next question I have is how much time in the buy zone? Because if we're waiting for this price to happen and it doesn't happen, the timing is going to be able to tell us that. And a lot of people forget about the timing. They just focus on the market having to hit this particular dollar. And that's not always the case. It's like the tops. People are waiting for 100K. But if you start to look at timing and think, well, time is basically running out here. We've been up in the market for 35 bars. We're on a monthly chart here. It's 3 years. Bitcoin's never really gone past 3 years for a cycle. So time essentially starts to run out. And time is the most important thing in a market. That's what Gann says. That's the old part of the Gann analysis. I'm definitely going to be focusing a lot on time. So if we start to look at how long has Bitcoin been in the buy zones for in the past, this is to make sure that we don't start to fall prey to wanting a price rather than just focusing on time and what the market is actually giving us. Well, we could say, look, the first time here, the market dropped in October of 2014, just for a brief moment. And then it lasted until October 2015, until it was out and never came back to that zone. I mean, maybe November touched on it slightly. It missed it by a couple of bucks, but basically 12 months here. And then 3 of those months weren't really in the zone. So 12 months, call it about 9 months in that zone. Next, we have the cycle of 2018, and you can see the bar in November, all the way to when the market broke out in April. It's about 5 months, and on the 6th month, it didn't come back. But we had the Black Swan event here. That was a brief moment, which was very difficult for the vast majority of people to buy into the market. When COVID happened, the C19 event dumped the markets for a few weeks. We remained in this zone, maybe 2 to 3 weeks from memory, and then the market bounced out. So that was 16 months later from when it first touched the zone. So really speaking, about 5 months, call it about 6 months in that zone. So we now have 12 months and 6 months, average of about 9 months. We go back here to when the market was actually in the zone, there's 9 months. So if we started this now as a rough measure from June, 9 months brings us out to about March of 2023. So if we start to get on at about a 6 month mark, call that December. So we're in October, say another 2 to 3 months from now, and you're not seeing the price dump to 14K or 16K or anything like that, and you want to give it that extra bit of time out to 9 months, now to March, and the market still is not getting back to these levels, you'd have to start to think that your time is running out and the market won't hit $14 or $12 or $10,000. So basically the lesson here is don't get fixated on a price. Just start to follow the time frames, because essentially markets are made up of people. People get bored. People get restless. People start to feel different emotions. They won't be fearful forever, just like they weren't greedy forever. These things turn. That's how cycles turn. It is based a lot on timing and not necessarily what the Fed did tomorrow, who scratched their ass where, at what certain meeting and told us certain things. It is timing. It is crazy to think like that sometimes, but there is a lot to do with timing. There's a lot to be said about it, especially when we start to look at cycles, and everything out there in the world, this beautiful planet of ours, is made up of cycles. So that point again, if the time starts to run out and the price has not met that area that you're looking for, underneath 10K, underneath 12K, maybe you have to start to pivot in that train of thought, that mindset, which is okay. We're supposed to pivot, especially in trading and investing. We have to, otherwise we will die out in this thing. You have to be able to pivot. And then start to think, all right, maybe I'm not going to get to that target price. What's my next plan? Am I going to start buying at the market price, whatever that may be, in 6, 9, 12 months time, and just say, well, I tried, it didn't happen, move on, and then wait for the next bull market. Now, the last thing here is the percentage and price range of the buy zone. This is where the emotional damage, I love that meme, comes into play, because this low could be very far off the top of that cycle buy zone. So in the case of 2014, 15, it was 100% from bottom to top. Now, that's the bottom to the top. From the top to the bottom, where are we? There, down, it's about 50 odd percent. And a similar sort of thing was in 2018. If I can get this about here to the bottom, about 40%. And right now, we're still not that far off the bottom. Maybe we don't reach it. And so that doesn't leave too much emotional damage for us. Currently, it's about 10 to 15% from our current price to the low of 17.5. So 20K down to 17.5. This is the area that we're in now. The main thing here is we could experience a lot of emotional damage in this zone, just the feeling of buying at 20 and the market going to 10 if it happens. But we have to be prepared that the market will eventually turn around and we'll start to head up higher. We just have to suck it up and say there is going to be emotional damage at these lower prices. But if I'm prepared for it and I can see what's happening, it's not going to feel as bad. So as much as it seems like it's all about the exact price I got to wait for, then all I got to do is just buy to that price. What we've seen and what we know to be true is that it does come down to a lot of timing and being prepared for any sort of emotional damage that you could feel from the market, and just being able to prepare and plan for that accordingly. And of course, if you want to join us for more education and investing and trading information, check out the Investor Accelerator before the price goes up very soon. Link is in the top of the video description. Tons of content over there. Like I said, over 30 hours. There's a monthly lesson as well, masterclass that we all join over there. Plus the weekly live streams where we analyze all of the markets, crypto, stocks, real estate, what we're doing in the markets, all your questions answered live on our calls as well. Don't forget to subscribe to the channel, bell notification icon, links to Bybit and BitGet all down there, thousands of dollars of sign-up bonuses. That's my shills for the end of the video. Thanks once again, guys. See you at the next one. Until then, peace out.